Businesses use bank accounts, checks, their bank statements, electronic fund transfers, wire payments, a bunch of different things to maintain really good controls over cash. And from time to time, they need to make small payments, and it would be difficult or cumbersome to use a check or an electronic fund transfer to do that. Think of something like paying for a taxi or Uber, or paying for a courier for postage. In these instances, businesses will use something called a petty cash fund. Today we'll look at how to establish a petty cash fund, make payments from a petty cash fund, and finally how to replenish the fund or increase or decrease its size. So let's take a look at an example. Consider a business, I don't know, let's say one that sells hats. All businesses need cash to pay for things, whether they are paying for computers and equipment, if they are paying salaries and wages, or if they are buying inventory. And a bank is a great way to securely pay for those items, whether they are using a physical check or some form of electronic payment. But what about smaller items, things like postage, or a cab fare, or small one-off office supplies? What do we do then? Well, let's go back to the business. This business is going to have a small amount of cash on hand, and they'll refer to this as a petty cash fund, which is a secure amount of cash kept on site. They will designate a custodian who is responsible for the cash in the fund. The custodian will receive requests for this cash from employees. And then the custodian and the employee will both sign what is known as a petty cash ticket, which documents the request and the amount of cash. Once this is done, the ticket goes into the box and the employee gets the cash. There's another step. Any receipts, invoices that support the use of the funds are attached to the ticket. The fund is then replenished later when it runs low, and the tickets are used to record expenses and monitor the fund. So the journal entries are not done until this replenishment takes place. It's important to remember that we will use an imprest system of accounting, meaning petty cash is only debited when the fund is being established or increased, and petty cash is credited when the fund is being eliminated or decreased. Let's look at an example. You can take a minute to pause the video and download the example. Try it yourself, and then come back to the video to see the solution. Let's take a look. In this example, we are looking at a business called Luna Barks. It's a pet store. Their employees need to make small purchases from time to time on behalf of the business. Management establishes a petty cash fund. You are required to record the journal entries for each transaction below. On June 4th, they established a petty cash fund of $500. So the way to go about this journal entry would be to debit petty cash for $500, and we would credit cash for $500. What's actually happened here is most likely the custodian, an authorized party within the business, would have gone to the bank and taken out $500 and brought it back to the business and secured it. Okay, this petty cash fund is established in the amount of $500, and using the imprest system, this is one of the only times you would actually debit the account petty cash. Petty cash would also be debited if the size of the account were to increase. Although a fund of $500, most businesses would consider pretty healthy, it's probably not going to go up from there. It's more likely to go down from there if any changes at all. Now moving on to June 30th, the petty cash fund contained $50 in cash, and the petty cash tickets totaled $447. The tickets totaled as follows. So that means you are being told what the cash was actually spent on. Here it says supplies for $200, postage $150, parking $97. The fund was replenished on this day. Let's get to this one. On June 30th, we know that they had tickets in the fund, and it was for supplies of $200, postage So maybe they have a postage expense account or mail expense account for $150. And they have a parking expense account, I'm sure, or travel expense could be another one, for $97. We know that they're going to have to top up cash. The fund was $500, and what was left in the fund was $50. That means the cash that needs to be withdrawn from the bank and put back into the actual petty cash fund is $450. Next, we have to figure out cash short and over. There's a few ways to go about this. You could simply just take a look to see, do you need a debit to balance the transaction or a credit to balance the transaction? A slightly more involved way of doing it would be to do a full-on calculation. We could take a look at the cash in the fund just prior to replenishing the fund. And we know the cash in the fund at that time from reading the question was $50. Then we can talk about the cash that we started with. So beginning cash in the fund was $500. From that, we can subtract less the total costs and expenses, right? That's from the tickets in the fund. Was $447. So the expected cash in the fund and hopefully this is starting to stand to reason for you, that if we start off with $500 in a box and then we have receipts of $447 in that box, you would expect that box to end up with $53 in it. However, when we take a look at the actual box, there's only $50 in it. This means that we are short. If I took 50 and I subtract 53, we'll get -3, which indicates we are short $3. So we can come back to this. A shortage is an expense, so cash short and over is $3. We can then check this journal entry to make sure we've done it correctly. I have $450 in debits and $450 in credits. The entry balances. One entry left to do. The fund was decreased from $500 to $400. There was $500 in the fund when this occurred. Perhaps management here decided that a $500 fund was a little too much to have on site, so they've reduced it for whatever reason. Well, the custodian would take cash and put $100 into the bank account by removing $100 from petty cash. And that's the entry and the conclusion of this example. I hope you found that example useful, so I'll see you next time. Thanks for watching.